Good afternoon, and thank you all for taking the time to join today's presentation. There's a number of things that have happened in Driver Group over the last few months that we've been working hard on dealing with and improving the business. As we move through the presentation, I'll introduce you to Charlotte, who is about to rejoin us. One of the things that a number of you will have noted is that we're currently going through a change of CFO, which is obviously a critical position within the business, and that's an appointment that the whole board were very, very keen to ensure that we got right. Charlotte starts full-time in July, but perhaps you'd like to introduce yourself and let everybody know a little bit more about you.
Yes, thanks, Mark. Hello, everybody. I'm very much looking forward to joining late July. I have over 20 years or 20 years plus experience in this sector, 2 8-year tenures at competitors of Driver, one of which was listed on AIM, so very relevant experience, hopefully, and both of those also went through to exit. So I'm looking forward to getting up to speed and working with the team.
Okay, well, without further ado, then let's start and run through the presentation. In terms of a global overview of where we are, lots of things happening in the world in the geopolitical environment, as it's called there, very fetchingly on this first slide. In terms of conversion of projects, we have probably about £500,000 worth of revenue currently on hold with projects that involve Russia principally, mostly with European clients working against Russian entities. There was one Russian client that we had that we effectively drew to a close when the various sanctions started to kick in. All of that work, I'm sure, will come back. It's just very difficult to deal with, particularly dispute resolution projects with Russian entities at the moment. And I'm sure that will come back in due course because those problems won't go away. Over the period, we have a modest downturn of 2% on our revenue, attributable to some of the challenges we've had in Middle East and to some extent APAC, which has affected our performance in the half year to delivery of 0.4 million. We have, however, in our European and which includes UK and America's businesses had both decent revenue and profits and a continued amount of steady growth in those businesses, which has been good. Had a particularly excellent year with our DPS business in the UK. And over in Spain and the USA, where we recently established ourselves, those businesses have attracted a few more people and become a bit more embedded into the business. And I will be traveling to New York on Monday to look at how we can leverage them further and bring some more work into the business, as they're both some of the busiest people that we have in the business at the moment. We took some steps to realign our Middle East regional strategy as a result of some challenges that we had, particularly in the UAE, and that underperformance in APAC also meant that we dealt with that at the same time with some cash and cost reductions, cash collections and cost reductions being put in place across those regions, which I'm pleased to say we've had some success in delivering. Our cash position stated on this slide at 3.7 million is at the half year as at the end of March, so before the recent inflow that we've had and you will have seen announced. Thanks, Hannah. Most of you, I think, probably know something about the business. We have 3 distinct divisions: our expert witness division, which is our highest margin work, our driver TREP business, which is higher end claims, dispute resolution, dispute avoidance, commercial consultancy, effectively. That, as you can see on the right hand side, is 50% of the business these days. 27%, just over a quarter, is the expert stream. We have some project services work, which is now UK only, and is actually reasonably profitable, and has had a very good year. It seems as though there is a resurgence of manufacturing and basic industries in particularly the northeast of England, and those guys have had an excellent period so far. I think, Charlotte, there's some numbers on this one, which must mean it's a slide for you.
Thanks, Mark. As Mark just mentioned, revenue slightly down by 2% to 24.4 million, resulting in a gross profit of 5.9 million, 24% gross profit margin compared to 26% last year. There's a small adjustment for IFRS 9 to do with slow debt, resulting in an underlying profit of 0.4 million compared to 1 million last year. Profit before tax, 0.1, and then 0.3 tax charge, and that's mainly to do with deferred tax on share options. Net cash, 3.7 there as at March, and utilisation has decreased slightly from 72 to 71, mainly to do with the Middle East. Next slide, please, Hannah. Thank you. This is the cash bridge. So in the chart on the right, we had the September cash balance of 6.5, and then in the period we've had an inflow of cash to do with the operating, the cash generated, a small payment there on capitalised leases, and then the largest movement is working capital. Trade debtors actually increased in the period by 2.8 million, but work in progress went down 0.9, so that's a net of 1.9 there, and most of that was debtors, mainly Middle East, which stretched 1.3 million, and an Oman debt as well on top of that, which we have actually received post year end. Post half year end, we've received 800,000 on that. We made a payment in the Middle East, 200,000 pension liability. That was late last calendar year, and have spent 600,000 on capital expenditure, 300 of that on the new ERP system, and approximately 150 to 200 on the refit of the Dubai office, which Mark will talk about later on, and tax payments of 0.4, resulting in the closing balance at the end of March.
Okay, thank you for that. So as a result of some of the challenges, we've adjusted our strategy slightly, and certainly in some of the more detailed, nuanced ways that we're operating, principally around the rationalization of our Middle East business and refocusing of APAC. And there's a specific slide for each of those where I'll pick that up a little later. And I've already mentioned, I think, that our strategy now is intended to build on the USA and Spain offices that are particularly busy, bring back some of that work to our UK centre, where we will be able to deliver it with a much more effectively balanced cost base rather than in some of the higher cost areas across the world that we operate. We're particularly are focused on oil and gas, power and energy. We've seen a lot of work in those sectors of late. Transportation, certainly infrastructure as a whole, is something that's been keeping us busy for a long time and shows no sign of abating. So those are the key sectors for us. Most of our clients operate at a fairly high level on our blue chip international clients and employers. So very keen to keep that focus on those key accounts, particularly those that we can leverage across the world. We've focused on high-end claims and expert witness for a while and been constantly refining that. We're also constantly seeking to hire new experts, both technical, quantum, delay, of all shapes and sizes, to fit into our expert offering of Dialis, because that we see as certainly the future and the way that we want to move forward. If I can have the next slide, Hannah, that would be great. So actions in the Middle East. I've seen a couple of questions in the Q&A, by the way. I think I'll deal with those a little bit later when we've covered the slides, because that will give it more context, but very happy to do so. And if you want to pop questions into the Q&A, that would be, that's absolutely fine. I'm delighted to deal with them. We had some challenges in our Middle East business that wasn't performing well. We had an unexpected drop in revenue that caused a very poor result, particularly in the UAE, and decided to take some action. We entered into an arrangement with another party, the contents of which are confidential and need to remain so. However, the outcome is that we've reduced our cost base by just over £3 million in this particular region. We've exited 25 people from the business to achieve that. We've also been able to downsize our office and recover our office fit out costs, and one or two other bells and whistles in that agreement which are positive to the business. But as I say, there is a confidentiality arrangement around that agreement which doesn't allow all of the detail to be discussed here, I'm afraid. Saudi Arabia, KSA, is the source of a lot of work for us. We see it continuing to do so. Took us a long time to get a legal entity there, and we're keen to continue to receive work from there. Our Oman team are focused on recovering some of the aged debt that exists in that region. We've been working on that for a long while and will continue to do so. The team in Qatar are unaffected by some of the changes in the Middle East and are already picking up inquiries for work post World Cup, both infrastructure and stadium work. The main thing that we're now really keen to make sure we achieve is properly leveraging our talent base from European based experts, UK and Europe, so that we can use them across the Middle East region. That's particularly important to us. I will just mention the dot on the bottom of the map in Africa relates to our JV arrangement in Africa, which is going particularly well. We've got several projects that we're working on there. We don't actually have permanent boots on the ground. Our partner provides those that element of the service. We just provide our expert witness input into that arrangement. So cost and risk-free in between assignments, but something that's going particularly well for us. So we're quite pleased with that. Hannah. Asia Pacific has also been restructured with an overall headcount and cost base adjustment that involves us exiting from the market in Malaysia and focusing on those key sectors that in this particular region we pick up a lot of work in: power, energy, transport, and our key accounts there. We'll also be offering our technical expertise across APAC. There seems to be quite a demand for engineering, structural, civil, mechanical, those kind of disciplines in disputes on large projects. So we'll be continuing to do that. We have some staff secondments taking place, and we are also doing well in our base in Korea in terms of generating decent inquiries for both expert and consultancy through there. The business in Australia is going through a very good period. It's had a couple of record months there since since the half year, following a slightly slow start. But overall, now that we've changed the management in this region, scaled it back a little bit, we're seeing some good things start to come through the pipeline for this region. Hannah, thank you. We've been in Canada for quite a long time, in Calgary and in Toronto. We occasionally use other offices in this region, which are provided by, again, a local joint venture partner that we also operate with in Dubai. We're in the process of continuing to recruit. There are 10 people in the business in Canada so far. I think there are about 6, possibly 7 today, actually, in the USA business, as we're starting to grow there with new staff joining all the time. It's not an easy place to hire, and to hire good quality people in the US, and we're very keen to make sure that we deliver on that, excuse me, and get ourselves that go-to expert witness firm reputation that we have in a number of places, and we're really looking to increase our profile in the US particularly. A lot of work won from the US is won in South America, particularly on international arbitration and larger infrastructure projects. That also links up very well with the office in Madrid in Europe, because our Spanish-speaking resource is very helpful in the process of securing that work. So that gives you a strategy picture for Americas. This slide's simply in to answer the question that some people have asked us as to why we haven't scaled back to 0 in some of these places. And just particularly reminds me of one or two projects I can think of, particularly in the Middle East, where we've required some boots on the ground to help us deliver on a commission. But we might have been doing that for a Chinese contractor or state-owned entity, I probably should say, but perhaps with the lawyers based in London and the dispute resolution forum being either London or Paris. So by being this connected across the world, we can leverage what we're doing to pick up the best work and the best commissions for our expert team. So it's appropriate to maintain some presence in some of these locations, but perhaps in the Middle East, not as big a presence as we previously had. So our overall global picture of snapshot of offices, staff and experts and the like appears on this slide. I would say of the 17 offices, a chunk of those are part of the Canadian joint venture. They're not physical, well, they're physical offices, but we don't meet the costs of them. We just simply occupy and use them. So headlines for Europe and Americas is the excellent performance in the UK and in our DPS business. Great bit of growth going on in Spain, which we think can increase over the next couple of years quite well. USA is looking good. Netherlands and Germany continue to be profitable with large engineering clients in the center of Europe working all over the world. And our management changes in France last year are starting to pay dividends with a really decent profit in H1 and a profitable pipeline in the Paris office. So positively going in the right direction in Europe and Americas.
Thanks, Mark. Small increase in revenue in the region to 17.4 million from 17.2. That resulted in a segmental profit of 2.4 million. Headcount there is actually the whole group, but over on the right is the headcount for the region, 182 staff there. Utilisation gone up slightly to 72.7, so closer to the 75 where we're looking for it to be. And that 182 has increased from last year given the growth in DPS, USA and Spain. Thanks, Hannah.
So as many of you will know and have already picked up from the presentation, and those of you that know the business well will certainly be aware of the challenges we had, particularly in H1 in the Middle East, which led to some significant cost adjustment and a deal with a third party in order to deal with that effectively, make sure that we could collect our receivables and deal with ongoing projects that need to be completed for existing clients. So that cost base, as I've already said, 3 million, 25 people, readjust that region in a very significant way. Qatar is unaffected and reporting encouraging results in Q2 and Q3 with some significant opportunities further down the pipeline that we're keen to see come through. The Oman office has been scaled back quite a bit, having some success in its collections and delivering on some decent projects. We stepped back from Kuwait in this particular region during this year because we weren't picking up the work to justify having a presence there. And our key target for new projects is, as I mentioned a little earlier, KSA, where we're seeing significant opportunities on a regular basis.
Thanks, Mark. Revenue in region fallen for various reasons Mark's been through to 5.4 from 5.7. We did manage to report a lower loss than last year at 0.3. Headcount there, so 62, that was at March. If you look over on the right, you can see June 22, it's reduced to 40, so reduction in 25 people there. Utilisation has reduced significantly, but again, that's a consequence of everything that's been going on out there. Yep. So the last point is covered in the fact that the new figures are shown on the right. Thanks, Hannah.
Asia Pacific, we adjusted a couple of years ago with challenges around the exit of a particular team that we had in this region. We are also going to be exiting our Malaysia operation as well and focusing on Singapore and Australia as our key bases in this region. That's why the office headcount has reduced there, and the overall staff headcount. Both of these operations are winning work, particularly from Korea. They're all busy. Australia and Singapore are difficult places to recruit in, and we have some staff that have now been with us for quite a long time, particularly the replacement of the regional managing director, who's been with us, I think, over the last 15 years quite consistently. So we're very happy to have a firm and safe pair of hands at the helm across this region, and we've also managed to adjust our management structure such that more time is made available to supervise and work with and assist these experts in winning some decent commissions. And we're already seeing the results of that come through, which is quite pleasing.
Thanks, Mark. Financials for Asia Pacific. Revenue fell from 2.1 to 1.7. Consequence of the problem project that we had in Singapore. That resulted in a loss of $500,000. The new headcount figures are over on the right, as Mark mentioned, are down to 21 at the moment. That drop's largely come from Malaysia. Utilisation in this area actually went up to 71.3 for the period, which was a consequence of the change in manager in the year, and also the efficiencies of providing some of the work through the group rather than externally.
A quick canter through, so thank you to you both. And as you say, you've had a good number, so let's make a start. Can you give some guidance on the likely write-down in receivables following the Middle East transaction?
I'll take that one, Mark, if that's
Sure.
all right. Hopefully none. Of the £3.5 million that we quoted as the debts in the Middle East, £2 million we've managed to receive the funds from the counterparty, and we'll now work with them to collect that to repay to them. 900,000 of that relates to ongoing work, current work, and work that we'll be keeping the ongoing relationship with clients. So that will be collected in the normal course of business, leaving 600,000, which we previously had provided. So if anything, there would be an upswing in that, and if we did get it in, we'd be able to release that provision or move it elsewhere.
Excellent. Well, sticking on the theme of the Middle East, because we have a few, can you elaborate a little more on the setup of the Middle East operations? I suppose that means perhaps now in a post counterparty world deal, i.e. the office structure and headcount per location, please.
Yeah, sure. We have currently 9 fee earners in Dubai, 3 in KSA stroke Abu Dhabi. We have 12 in Doha, in Qatar, and we have about 10 people currently in Oman working on projects as well. We also have some people in the region who are administrative and support the whole region that are based in the UAE, and have been part of our ongoing review about how we make that more efficient. The difference, I think, in structure is that we appointed a chief operating officer in my colleague Tom Comerford, who's been with the business for almost 20 years, and particularly has worked with me on our very successful operations in the UK and Europe during that time. And that means that Tom has been able to devote some close attention to the Middle East, leaving some additional time for me to look at Asia Pacific and the US. So our management team has been expanded, if you like, to give the focus that we want to on these offices, at the same time as reducing the headcount in those offices to what we feel is the optimum to de-risk them and yet still provide us the opportunity to win the projects that we want to win in these regions.
Okay, well, that's a nice segue onto this next question. Obviously, your cost base in the Middle East has been hugely reduced, but so has a fairly significant turnover to the group from this region. I understand this revenue sacrifice is deemed a worthwhile trade-off for higher quality margin work, or will revenue decline and be more limited with delivery just offshored back to the UK?
It's a big question. So let me break that down into as to how I see it. Inevitably, with 25 people leaving the business, we're going to lose some revenue. That said, we are taking the existing relationships that we retain to be delivered not just locally, but also in Europe and in the UK. And in fact, actually, some of our consultants in Canada are currently working on jobs to assist the Middle East. So we will retain more revenue than a simple pro rata on the headcount will suggest. But not all of the revenue clearly that was going through the Middle East was good revenue, in that we weren't making profit on a chunk of it. And also it's all a lot more difficult to collect than it is necessarily in other parts of the world. So whilst there is a drop, it won't be anything like as significant as a simple pro rata will suggest. And also what we lose, frankly, are the bits that we're happy to lose.
Thank you. Sounds hugely positive. Are APAC and the Middle East likely to return to profitability in the near term, following the realignment actions you've taken?
Yes.
Simple. And can you give an update on the collection of the overall Omani client-related debt?
I can. During the last 12 months, we've persisted as we said we would and intended to try and collect as much of that as possible. We have a pipeline of receipts coming through. I think we've collected over the last 3 or 4 months about £700,000 or £800,000 in total. That reduces that down further, and we have an expectation of similar significant receipts in the next 2 to 3 months.
Okay, moving on from the Middle East then, could you give a little bit more detail on how the ERP implementation is going?
Charlotte, would you like to take that one?
Yes, I will. As with all of these things, it's never perfect from day you don't switch it on and it all runs perfectly. Good news is invoices still going out on time. It's the backup to the management pack that we've had some delays with. So there's been, they've been a week later than they would normally be, say, for April and May. But we're hoping that that will improve each month as we go through and iron out the quirks in the system.
Thank you. Perhaps a little bit on sort of wage pressure then. How much are you seeing in order to retain and recruit new experts?
That's a challenging question because not least that experts have always been difficult to hire of a decent caliber, and it's important to find ways to retain them effectively. So it's not a simple across the board statement. It's harder in some parts of the world than others. We do have some LTIP schemes and similar things running in the business that have proven quite effective. And we have some great relationships with our staff as well. There are a lot of people in the business who are, this year have collected 20 and 25 year work anniversary gifts. So we have some very strong relationships with our staff. That said, there is a lot of private equity disruption in the market from people who are chucking very large sums of money around, and we have to be on top of that as best we can and deal with it as best we can. I'm not going to say it's easy, because it's absolutely not. It's a very real challenge and something that we're looking at all the time in the business. That said, some of our staff have picked up new joiners from these kind of organizations where they've gone in for a large sum of money, and actually they've realized that the working environment is not what they expected. What is expected of them is quite significant and not necessarily backed up by the right support. So that disruption in the marketplace is going to be there for quite a while. But what we're starting to see is it turn around a little, where some people are beginning to back out of some of those businesses and want to come and work in a more team-related environment like the one we run, and particularly if they are at a stage of their career where they are looking for some very focused and positive career development, which is something we offer. Not all of our competitors are able to offer that.
Okay, thank you. Perhaps related to that then, a follow on here. What are you seeing in terms of the desire for remote working for new starters, and what is your regional policy in regards to working from home?
This varies around the world. Middle East, most people are back in the office. Same in Asia Pacific, effectively. US has been behind the curve, and the guys over there have still been in their, working from their basements and their back rooms for a while. Although we do have people in the office at the moment, so that's beginning to come through. In the UK, what we've seen is people keen to come back to the office, but not necessarily full time. And that's about having a policy in place where we manage what's happening. We make sure that people are in the office and available to meet with clients and to go marketing. That's particularly important to us. And also that the more junior members of the staff are able to be mentored and developed effectively, which is not always possible with remote working. That said, we have picked up one or two people in the business as new hires where their existing employer wanted to enforce a complete return to the office. And some people, reacted to that by voting with their feet. So I think we're in a new space, we're in a new world for work, and it's about managing it effectively. And that will, of course, affect our decisions on what we do with lease renewals and the space that we occupy as tenants.
Okay, thanks. If utilisation increases markedly above current levels, which I know you're all trending towards, then who would win the new business? I suppose that's a question around, and who's, if you're going to be very busy running around fulfilling contracts, do you then build in the capacity? I mean, relates back, I suppose, a little bit as well to recruitment.
Well, in this particular type of consultancy, and I'm sure in many others, you end up running a sort of almost like a sort of grand old Duke of York business, really, in that you win some work and then deliver it and everybody's flat out. And if you don't carry on marketing, that goes off a cliff. And then everybody has to go marketing for a while, and then everybody is. So I think we're experienced enough in running the business to know that actually when you're busiest is one of the times when it's most important to make sure you are maintaining the marketing to make sure that you've got a pipeline. And we do monitor quite closely pipeline. We have some very professional staff in our business development teams. Ultimately, the work is won by the experts and the senior staff in the business who are well connected, well respected, and often sought after by clients. So there's an element of a sort of sausage machine there that just keeps turning, where we're constantly going out and keeping in touch with those clients and maintaining those relationships. Work is flowing in, being delivered, and that delivery is being monitored against other opportunities coming forward in the pipeline. So it's something that we've been doing for 40 years and are quite, I think, quite slick at now, in fairness. It's not an easy process, and it takes a while for people who are new to this type of sector, people moving in from, say, contracting or a different type of consulting, have to get their heads around it. But the people, particularly experts who make the time to go to events and mix with clients, even when they're busy and up against a deadline, are the ones that are the most successful in this business. And they tend to be the ones that mentor others to do the same.
Thank you. We're more than 2 years on now since we all locked down for the first COVID, and we were all expecting a rush of commissions perhaps on the back of that for businesses like yours. I think there's a stat here that someone's contributed. The RICS noted last year that more than 95% of worldwide projects were delayed. How is this filtering through to you, if at all?
We have seen an influx of work over time related to delayed projects, particularly projects in the Middle East that were delayed during the pandemic and in other parts of the world as well. I'd say that, the number was closer to 100% of projects that were delivered late or were over budget in that period, because it was an incredibly challenging period for all of us to work through. So the pipeline of opportunities related to COVID affected projects is definitely there. That said, I think also there was probably a degree of pragmatism from experienced clients about needing to come to arrangements such that they avoided taking every job to some kind of legal forum, because I don't think that would have been in anybody's interest. I actually think that in some parts of the world there is a chunk more to come that has not yet come through to a formal dispute. Certainly, I think it's taken longer to come through than we would have thought. We know a number of clients are trying to negotiate and develop a position that if they can't get somewhere effective, will come back to us when it starts to get more formal. So there is a pipeline out there. We've seen some of it, and there's definitely more to come. Okay,
thanks. A couple here, obviously on the buyback, very welcome, but someone says small in size. Are you likely to increase this if the initial amount is exhausted and the share price remains low?
Yes. I will add a little more, you'll be relieved to hear, colour to that. Like many small, some would say micro businesses on AIM, the stock is quite illiquid. And it can take several weeks to buy a chunk of stock in Driver Group, because it depends whether or not there are willing sellers. Equally, if you find willing sellers and willing buyers meet, you can do deals very, very quickly. The volume that's traded each day is fairly low. It's lower more recently with the share price at its current level, simply because a lot of our investors feel that the stock is undervalued and now is not the time to part with it. Other people may well decide that they want to move on to something else, and you know, that's a matter for them. So we're not seeing large volumes traded. We don't actually know what effect we're going to have on price with the process that we're going through of a rolling market buyback. We need to keep control of it. We need to monitor it. We need to see how successful it is. If it is successful, then, and I don't think success is measured by share price alone in this. There are a number of other metrics that many of the people tuned into this will be aware of around achieving effectively the opposite of dilution by doing this. It is quite possible that the board will sit down and we will discuss and agree extending this program, but we'd like to really see what happens over the next 2 to 3 months with this program to see how much stock we can pick up and bring back into the business over what time, and of course what happens to the price during that time. It's plainly a great time to be doing it, given the level of price that we're at and the fact that we have more cash than we require for operations.
Just a quick one on the dividend that you have agreed to pay out. Do you have an ex-dividend payment date?
I believe it's October. Charlotte, do you happen to have that date by any chance?
Yeah, 7th of October for all of those on register at 26th of September.
Thank you. And then just a follow on really, I think, from the working from home discussion, is there an opportunity there for you to reduce costs, sublet office space, perhaps, particularly in the UK?
The only office we have that is of significant enough size to allow a sublet is going to be in London. It's unlikely we will be subletting. I don't think that's not likely. I think, however, whether we stay in our current accommodation or we seek something different will depend really on what we see over the next few months. I think it's about 18 months away, the next break opportunity. And for us, it'll be about looking at who's coming in, what they're doing, what we're achieving. Are those numbers going up or down? What's the trend? We don't actually know. We're still quite close. It's only sort of 3 or 4 months since we've been back in the office effectively. Let's see what happens. The one thing I can guarantee is that we will be watching it very closely. And if there are opportunities for operational savings, then we'll certainly be looking at them. I'm not sure Charlotte's going to let me get away without looking at them.
Well, you're a welcome addition, Charlotte, and thank you both for the presentation and the Q&A today, and we look forward to a further update in 6 months' time.
Okay, thank you all for joining.